Well, hey everyone, this is your old buddy Romulus with Backpack Trader. Yes, that's right. We are still trading, moving money, sloshing around the markets, and hopefully you are doing the same, but doing it as well as we are, which is making money. Tesla did have earnings yesterday. We talked about the possibility that it was not going to be a smash fest like Netflix, and that turned out to be the case. However, if this was a year ago, a year and a half ago, when overall conditions were much brighter, better, and stronger, an earnings report that Tesla just released would have pushed the stock maybe near those all-time highs, if not to an all-time high. I mean, it would be up 25, maybe 30%. Look, today it's up 6. A 6% move is tremendous by today's standards. By a year ago, 18 months ago, not so much. Things are changing, and that's one of the things that you're going to have to get used to and adapt to if you want to continue to thrive and make money in these markets, which I know that you do. That's why you're checking in with your old buddy Romulus. Exactly. So does it have the possibility of getting to these all-time highs? I don't think so. Not for several years, but it could get up in this neighborhood over the next couple of months. However, we are in a bear market now, everybody. And that's another thing that has to become part of your model and your thought process. We're not just lollygagging through the markets like we were some time ago. You know, the Robin Hood and Reddit style phases and crazes, they're gone. They'll come back, but it won't be for several more years. Okay, several more years. Now people are getting all excited about a company like Proctor and Gamble. Could you believe that? Unbelievable, really. Netflix still going down. Yes, another couple of percent today. This eventually will slow. The company is not a favorite of the big money players anymore, but it is also not a piece of garbage ready to be thrown away and discarded and bankrupted. They'll survive. Obviously, 70% lower than they were 5 months ago, but they'll survive. I wouldn't try to catch that falling knife aggressively, though, but there could be a trading opportunity in there. Let me show you how to create that. Are everybody ready? Everybody paying attention here? Let's do it. Old buddy Romulus is going to show you a decent trading opportunity. So this is XLC Communications. Okay, companies, the bigger primary companies in here are companies like Facebook. Okay, they're getting smashed today. All right, now, this particular group is a basket. It's an exchange-traded fund. It's just getting lower than that mid-March low, which was right now the lowest point of the stock market in general, the S&P 500, that is. That March 8th, March 14th low right about in there. So it's just breaking down those lows right now, okay? So a lot of traders around the world are looking at that, and they're saying, oh, it's breaking down. It's time to get short. So it's going to go much, much lower. And in time, it probably will. As a matter of fact, come back around in July, August, and September, this basket will most likely be much lower. However, because it's been so beat up aggressively here over the last couple of weeks, there's a possible counter trend move developing in XLC and some of these larger communication companies. So expect to see that stock over the next week or two coming back a little bit. Where? Probably not up to these highs. That's asking too much. Okay? But it certainly could give a little bit of a rebound up to this neighborhood or so over the next couple of days, maybe a few weeks. No problem. That doesn't seem like a big stretch. And then it starts to continue on its downtrend over coming months. Here's another one. Everybody like to go get a tan. That's right, solar companies. So the biggest stocks in here, let's see if I can get that figured out. The biggest stocks in here would be Solar Edge. That's a big one. Enphase Energy is another big one in there. First Solar is another fairly large representative stock in there. The companies are all pulling back. This is a big favorite with the environmental group, as it should be. However, the stocks as a group are pulling back. They're experiencing some pretty severe losses, 5% a day. That's pretty severe. Getting oversold, okay? Getting oversold on the short term, maybe within a week or two, ready to turn up for a bit of a bounce, okay? So keep an eye on this one as well. XLC maybe down a little more, and then coming into a bounce over the next couple of weeks, and TAN as well, go down a bit more, and then turning back around up for a bit of a bounce. Neither one of these is going to be challenging their previous highs, okay? I don't think TAN gets back up here into $98. I don't think XLC gets back up there. Heck, it probably doesn't even get back up to these highs from just a few weeks ago. We're looking for shorter term opportunities, however, and these could be presenting themselves. Not too much of a stretch to see that as a possibility. All right, tech opens up pretty hot today with the Tesla move, and now it's pulling back a little bit. There's more earnings coming, a lot more earnings. Microsoft, I have Apple right up here. They're also coming. Google. These companies are down. They've been beaten up. They could be due for a little bit of a bounce. Speaking of bounces, this could go the other way. One of the reasons that the market's been having problems, and really the main reason it's been having problems, is because of the rising interest rate environment. It's not so much the war. That's simply exacerbating it and pushing the trends further in the direction that they've already been. Okay? This is quite a situation right in here. Again, this is your old buddy Romulus with Backpack Trader. I've been doing this stuff for over 27 years. 27 years. It's been a fantastic journey. I've loved every minute of it. Been absolutely thrilling. And I'm grateful for the opportunity to share a little bit of that journey, experiences, and skills with you. Hopefully it can help. Okay, so the 10-year, this is overdone. Okay, look at this. We've got very overbought status, some negative divergences going on in the indicators, perhaps due for a bit of a pause, but you think, hey, Romulus, how can that be? The Fed comes out, raises interest rates on May 4th. Sure, the market, though, does things ahead of time. Remember that. It sees things weeks and months in advance. It already knows that the Fed is going to raise interest rates in a couple of weeks, and they're going to raise it 50 basis points. Everybody knows that. The question mark is, what do they say during the meeting? Well, they're going to say that they're going to keep raising interest rates. Most people are aware of that as well. So not a big mystery going on, beside the fact that rates have just gone up. They've more than doubled in the past 6-7 months in the 10-year. The 2-year, they've gone up about much more than that. They've much more than doubled. We're talking about 600-700% move on the 2-year on the shorter term rates. So pretty incredible. Someone asked me recently, interest rate increases are supposed to be better for the banking sector. That's true. However, and we can look at the banking sector right here, financial, this is XLF. Specifically, there's a group of bank stocks right here. Okay. They do lend at higher rates as interest rates go higher, but they borrow money also. Banks do borrow money, and their borrowing costs are more pinned toward the shorter end of the spectrum, and their borrowing costs have gone up on a percentage basis more than the higher rates that they charge on their loans. So their margins, at least in their lending departments and divisions, have contracted a bit. In addition, economy perhaps getting slower 6, 8, 10 months down the road. That will negatively impact the bank's margins as well. And then there's that specter, that ghost out there, that Putin and the Russian military will continue to create problems inside of the banking sector in America and Western countries, more so than they've already done. And that's a problem as well. So all that great stuff to keep in mind and watch very, very closely. Again, markets still not ready in this old Roman's opinion to start ripping and roaring back to the downside. I do believe, and I've said this consistently, that by the end of September, this low area, late February, early mid-March, will be revisited, possibly lower, in all major indexes. The S&P, the NASDAQ, the Dow, the Russell, all the sectors as well. Everything goes back and revisits those lows. Do they get down through them? Possibly. Possibly. That's really not worthy of a discussion point right now. You can figure that stuff out later. However, it does look like there's a good chance. This could take the next 5 months, however. That's something you've got to keep in mind. This could take the next 5 months. It could also happen in the next 5 weeks. But more likely, it happens over the next 5 months. It does take a little bit of time. This bull market, which ended, in my opinion, at the beginning of this year, has been running from March of 2009, the longest running bull market in American history in terms of chronology. And what did your old buddy Romulus do with that information? Back on January 13th, right here, 1.5% away from the all-time high, I pulled the plug. Said, get out, get out, get out. This was with retirement money, long-term, 401k accounts, all that kind of stuff. Get out, get out, get out. So pretty happy that I was able to pull the plug on the longest running bull market in U.S. history right at the all-time high. That's not something that happens every day. All right, I'm going back to ancient Rome. This is my last post of the week, everybody. Tomorrow, I don't plan on doing a whole lot of work. We have a great spring session coming. Phenomenal weather. Finally, we have paid for it dearly with this winter that just never seems to end. That groundhog, if I ever get my hands around him, I'm going to squeeze his neck because he lied. This winter wasn't 2 weeks. It wasn't 6 weeks. It just kept going. I mean, we had snow just a few days ago. Crazy. Okay. Well, this is your old buddy Romulus. I'm checking out, going back to ancient Rome. That is all for now.